Our next speaker is Stephen Simmons. Stephen Simmons was a research analyst at Tudor Investment Corporation, where he built and managed trading systems with tens of millions in assets under management. Later, he was CTO at ETHUSD, Director of Technology at Idea Lab, then American Towns. So with more than 30 years of success, he's a veteran in the worlds of quantitative finance and internet technology. Now the founder and CEO of WaveBasis and the platform's oldest active customer, Stephen is on a dedicated mission to advance the science of Elliott Wave analysis and serve the Elliott Wave community with the best tools possible. Over to you, Stephen.
Okay, here we are. Hi, Jody, and hi, everybody. Thanks for having me back. I'm excited to be here again. I hope everybody's enjoying there's been some great presentations so far and lots of great ones to come later today. So I'm Stephen Simmons, the founder, creator, CEO of WaveBasis. For those of you who haven't heard of me or the platform. So I'll talk a little bit about some of the background of WaveBasis. Then we'll talk a little bit more in detail about the features that are available on the platform as we walk through some actual analyses on some of the markets that we all know and love. So why did I build WaveBasis? As Jody mentioned in the intro, I worked at Tudor Investment Corp in the early 90s. And I knew that at that time was my first exposure to Elliott Wave analysis, working with Paul Jones. And so then later on, I won't go through too much of my life story, but flash forward to 2014, I started sort of getting back to my financial market analysis roots and got re-interested in Elliott Wave analysis. I saw some of the analysts out there and charts and counts, and I just could see, these amazing forecasts that were coming out. And it was just easy to see that there was value in the Elliott Wave approach. But having the fact that there were so many years that had gone by since my first exposure to Elliott Wave analysis, I just assumed that I was seeing a lot of folks doing manual wave counts. I had assumed that somebody had done a good job of automating Elliott Wave analysis, because there are a lot of sort of repetitive and tedious tasks that you have to work through to build solid wave counts. So I went looking around and ultimately became kind of underwhelmed and dissatisfied with the existing automated solutions. So decided to, as a sort of a side project initially, see if I could build some algorithms that would be helpful for automating Elliott Wave analysis. And that was the birth of WaveBasis. And through that process, I began to take the principles more seriously and try to bring, one of the things I guess a lot of folks complain about or have reservations about Elliott Wave analysis is the level of subjectivity that can go into it. So the approach here, WaveBasis, has been more to approach Elliott Wave theory, principles of Elliott Wave as more of a science. There's the WaveBasis itself provides a lot of the objective information, statistical information, probabilities that are intended to help with that orientation toward a more scientific approach. Just as a side note, I traded with WaveBasis once a workable prototype had been built. I traded with it for about 2 years before releasing it as the platform you see now. Overall, one of the big goals is to make practicing and applying Elliott Wave analysis faster, easier, and, as I said, more objective, and thus more effective and reliable. But overall, as has appeared in some of the materials that have come out related to this Elliott Wave Hub event and ones in the past, traditionally, Elliott Wave analysis has been in the hands of institutions and big banks. One of the things that we're trying to do with WaveBasis is to change that to better empower individual traders with the same level of tools and market insight. So that's some of the background. Diving a little deeper into how I approach and by extension, how WaveBasis approaches Elliott Wave theory. And this is also, I think, I like to say this, if anybody has heard me speak before, I always like to mention this bit as sort of a grounding exercise to sort of set the stage for exactly what is Elliott Wave analysis in its simplest terms. Ralph Nelson Elliott, in the 30s, as others have mentioned, demonstrated that people behave in cyclical repeating patterns, just like everything else in the universe. And as we look at the fundamental nature of things, we all, as individuals, as communities, as countries, as a world, and everything else in nature operates in patterns. And things that move in patterns can be predicted. This is the foundation of Elliott Wave analysis. And sometimes I think when we're looking at charts and we're annotating charts and lines and Fibonacci this and numbers, it can become an abstract exercise of trying to predict a squiggly line on your screen. I think it's helpful to remember that squiggly line is not an abstract, independent phenomenon. It's a representation of what groups of people are collectively deciding to do at any given moment. So it's really, you're measuring what people are doing. And as Elliott has discovered and shared with us, people behave in patterns. Further, what Elliott gave us is the notion that he came up with the Elliott Wave framework. It provides a mechanism for measuring these naturally occurring patterns. And one of the things, again, to sort of root this in reality is using Elliott Wave analysis to track and forecast markets is a bit like tracking a real world phenomenon like a hurricane. It's a dynamic, always changing phenomenon that you can predict, even in its chaos. Even in its seeming chaos, there is an order. There's an order to a hurricane, there's an order to financial markets, and Elliott Wave is a great way to capture that order. Further, my approach is pure Elliott Wave analysis. I follow the patterns, use RSI and MACD, as many people do, and volume for confirmation of patterns, just to help with a little bit more of an edge, a little bit more information as I'm making decisions about patterns and evaluating the wave counts that come out of WaveBasis. And I rely heavily on market context for guidance. We'll talk a little bit more about what I mean by market context. And that's, if you go to our website or blog or documentation, we talk in videos, we talk a lot about market context because it's an important aspect of Elliott Wave analysis in general, or in particular, and it's an important aspect of forecasting financial markets. You want to know whether, today, does it look like we've been in a long-term uptrend or in a correction? This is a simple way to think about market context. And in making forecasts and tracking markets, the focus is on probability, price levels, and price structure. Probably we'll talk a little bit more about what indications of probability you can find in WaveBasis as an extension of what is inherently part of Elliott Wave analysis. So, what is WaveBasis? In simplest terms, it's an Elliott Wave charting platform with rich automation features. One of the biggest misconception about WaveBasis, whenever folks, in my experience, when folks hear automated Elliott Wave analysis, they tend to think that the idea is to replace human beings. And I guess this is we're in a time where everybody's talking about replacing human beings with what machines do. But that's not what WaveBasis is. WaveBasis is not a substitute for properly practiced Elliott Wave analysis. You still have to be a human being with some knowledge about the process. Now, with that said, WaveBasis is not used. The best use of WaveBasis is not as a signal generator. Now, as you'll see, as we get more, as we start looking at charts, there are pieces of WaveBasis that folks do use as signals. And based on feedback we've received, some of our traders have found success with that. But we don't recommend WaveBasis to be used as a signal generator. There are, as I said, there are layers of practicing Elliott wave analysis that should be practiced even with the automation that WaveBasis provides. It makes things faster, easier, more precise. It doesn't replace the thought that needs to go into it. WaveBasis is data-driven. The previous speaker, I'm sorry, I forgot his name, mentioned this. In the past, you know, there have been luminaries in the field of Elliott wave analysis. We know their names, so I won't repeat them, who have produced literature that is basically a reflection of their findings based on the data that they were able to look at. We've had the benefit of, at WaveBasis, we've had the benefit of access to orders of magnitude more data, and that has helped us not only produce the software as it is now, but it helps us extend the research and some of the conclusions that were that had been come up with in the past. Who is WaveBasis for? It's for everybody that has an interest in Elliott wave analysis or trading in general. Beginners can learn practical Elliott wave analysis using WaveBasis. We'll look at some of the tools that are specific for that. And experts can apply Elliott wave analysis faster and better using WaveBasis. So what are we going to talk about today? Some of the topics that we'll touch on as we work through charts. Wave count tracking over time, again, market context. I'll talk about some of the counts I've presented in the past. Evaluating wave counts, and we'll touch on what I mean there by meaningful Fibonacci levels. High probability turning points, commonly referred to as, in the cases that I'll show, commonly, very often referred to as confluence. And one thing that I haven't talked about before that's an important, and I don't hear much talk about it, to be honest, is assessing the opposite case of a particular wave count. And we'll look at the tools in WaveBasis that can help with that. Multiple time frame analysis is an inherent part of Elliott wave analysis, so we'll touch on that as well. We'll look at some specific markets. May not get to Bitcoin, but we'll see. Okay, I think is that the last one to be entering. Yeah. Okay, so let's jump into WaveBasis. Okay, I'm going to start with stocks. We're going to look at stocks, some metals, and some cryptos. First up, we have here a Tesla weekly wave count. And we'll talk through, well, first I'll mention this line here, this vertical white line is from February 16th. And this is what I'm going to talk about markets that today that I've talked about before, starting really last summer, fall. I started talking about some of these markets, and I'm still tracking exactly the same wave counts that I was tracking back then. So in this case, Tesla, I talked about on February 16th at the last Elliott Wave Hub event, and we'll talk about that in a minute. But let's look back in history, talk a little bit about why I like this wave count. One of the things you might notice here are these colored boxes. These colored boxes represent probability-based expectations for support and resistance levels. So one of the first things we'll look at here, and I'll occasionally make reference as I walk through these to favorite numbers, maybe we could call them. And these are things that we haven't yet compiled and published, but we'll do at some point. Things that just have come out of our research of looking at millions of wave counts. And one of them is so we can see here, let's take a look at this. So when you hover over a wave in WaveBasis, you can have a number of tools automatically display or annotations or whatever you want to call them. For example, here, when we hover the wave 2, we see Fibonacci extensions. We see the colored box, which is expected place for wave 3 to have appeared. You can also kind of see it's a very narrow Elliott wave channel there. We'll get probably a better example here. That's an Elliott Wave channel. You can see that actually, well, let's lock that on the chart. I didn't even think about that before. It turned out to be a great place to help with finding that wave 5. So first thing I wanted to look at here is where did this wave 3 hit relative to the wave 2 down here. And we can see there it hit at the 361.6% Fibonacci level, which when you have a monster wave 3, that's a magnet spot for it to stop. So this, I say that because one of the things that's important in formulating a forecast from a wave count is building confidence in the wave count. So you look for things like that. Where did that wave 3 hit? Well, that's a pretty common place for a wave 3 to hit. It gives me a little bit of confidence. Then we can see, well, where after that wave 3, where would we have expected wave 4 to be statistically speaking? Well, it stopped right where we would have expected it to. Same thing with the wave 5. Where would we have expected it to? A little short, didn't hit the middle of the box, but we would have been alert for it, a topping in that area. And in particular, if we had watched our Elliott Wave channel, we would have been looking for this spot to top this out. So this is a solid wave count that I've been tracking for a couple of years now. And then we have the wave 2 coming down. What can we learn here? We have an A, B, C. Looks like B hit about where we would have expected it to. Again, these are objective. This is objective information. These are not predictions. It's just probability. And it's as anybody who does trading or anything else that has probability related to it, it's important to know what the probabilities are as you're making decisions. Sometimes, as in this case, well, we had and what we have here is a confluence area. When just to spell this out a little bit more, based on how these colored boxes work in terms of probability, when we hover over the wave 1, we see we would expect wave 2 to finish down here around 200. Once we had a five wave move down, well, maybe that could have been it, but that would have been somewhat of a shallow wave 2. So we had our wave 2 bounce, wave B bounce, and stopped about where we would have expected it to. After that wave B, we would have expected, as many people probably already know, most typically or very commonly, wave C is the same length as wave A. So that would be this area here, A equals C. So in this case, we see that our highest probability area here is this area of confluence where 2 projections at different wave degrees overlap, generally provides an additive probability. The market dropped a little lower than that. Like I said, these aren't predictions, these are probabilities. So what that can tell you is when we're down here in last December, if we had confidence in this wave 1 rally, what we know when we get down here is that wave 2 is statistically late. So that's information. Maybe it's going to keep dropping, but you have the information that, well, if we have a probable understanding that it's going to rally soon, now we know it's late. Here, we know it's kind of early, for example. That's the benefit, that's the utility of probabilities. It's, again, not predictions, probability. So let's zoom in a little bit. That's a weekly chart. Let's go down to the daily. Back in February, since we'd had a turn here at the 76% retracement, which is I've mentioned before, one of my favorite places to trade from on a wave 2. We had, coming into the last Elliott Wave Hub event in February, I don't remember exactly, I haven't reviewed the video, but I was looking for a topping coming into that presentation and followed by a drop back to the 150 area. Well, that's what we see happen here. And not only did that happen, it happened in what would be a statistically beautiful ABC, right into the confluence area where we would have had the highest probability expectation of a turn, and then the market turn. And we've had sort of the beginnings of a raging rally here. So where are we now in Tesla? Well, we can see we have, looks like according to WaveBasis, so 1, 2, 3. Well, how is that? Where are we thinking that 3 is in terms of where we would have statistically expected it to be? That's a little higher. Never complain about that, especially when you see a market that has some energy behind it. Maybe it's going to overshoot your wave 3. But what we were expecting now is a drop back for wave 4 to about here, and then a rally up in a wave 5. Now, moving forward in Tesla, we would tend to expect wave 5 to finish around here, around the 300 area. But let's again turn to market context. Where are we in this rally? Well, what we're building here, if we still have confidence in this 1, 2, and I have no reason not to have confidence in this 1, 2, it's statistically beautiful. So we're shooting for around the 390, 400 area. What that tends to imply here is high probability stopping place for wave 5, and we might get that. We might get, let's see, we might get up to here and then drop for a wave 2 and then rally. Or this is a good moment to be alert for an extended wave 5. And if wave 5 is going to extend, well, there's again, some favorite numbers are coming here. If wave 5 is going to extend, well, how far can it extend before it starts to slip into outlier territory? In our research and experience, wave 5 very often will target the 100% extension. So it very well, so this is a time with, again, it's just probabilities, just objective reasoning. It's a reasonable time to be alert for an extended wave 5 in Tesla. And on the shorter sort of intermediate term, you may be looking for an entry in here with maybe a stop at the overlap point here, who knows? I should have mentioned at the top, I'm going to focus more on the longer and intermediate term horizons here. So that's Tesla. Let's see, give me 1 second, just check my notes to make sure I said everything I wanted to say about Tesla. One thing I'll mention here is one of the features of WaveBasis is a wave count forecast. And this is an excellent tool for beginners or even intermediate Elliott Wave practitioners who are still getting used to interpreting wave counts. If you are, before you can be a great Elliott Wave analyst, you have to learn how to interpret other people's wave counts, how to interpret a wave count that WaveBasis puts out, how to interpret your own wave counts if you decide to modify wave counts manually. This gives you in simple terms, in simple language, what can be surmised from a particular wave count, and this works with all of the all of the automatic wave counts in WaveBasis. You can see, I won't read it out loud, but it gives you a short-term, medium-term, and long-term forecast based on the wave count, and then a description of the count. Okay, what I'll do is, I think on our blog, when I talked about today's Elliott Wave Hub event, that I would put links to my charts. That's not what I'm looking for. Links to my charts in the event. So where is the? I still don't know how to use. There it is. The chat. There we go. So I'll paste that. The link you can. The link that I just pasted is a link to this chart that we're looking at now. You can click it and get an image of the chart, and you can, people who already have WaveBasis accounts, or even if you don't, you can load exactly this chart with all the annotations and everything into your own WaveBasis and track it forward or trade off of it from there. Next up, is, let's look at the stock market. And this is an opportunity. We're looking at S&P futures. And talked about this before. I won't look at the much longer term wave count. What I'll look at right now is one of the big questions that is on people's minds about the stock market is, was the drop into the October 2022 low all of the correction from the all-time high back at the end of last year? So what I'll look at now is one way to answer that question. So what we see here is that you can count the drop. First, let's look at the bullish case. Let's assume that, I'm sorry, the bearish case. Let's assume that this drop into the October low was the beginning of a bigger drop. If you use that assumption, we can count 5 waves down through the white lines. Excuse me. I haven't seen it recently, but last I knew, Prechter folks were counting it this way. I guess I should update my understanding of what they're doing. If that is the case, then what we have here is we're bouncing up in a wave 2. And you can see, again, our high probability zone, we're a little high for a wave 2, which, you know, I wouldn't call that unexpected given the current climate of things. But let's get into the count. So if we count this as an A, B, C, we see that A equals C is this area here. So we're just short of that. And how are we getting there? Well, we're counting up in, so far it looks like 3 waves and stopped right where we'd have expected that 3rd wave to hit. So we would tend to expect, and project that forward, a drop and then a rally. May not get that high. Maybe there'll be some magnetism around the A equals C to finish the 2 here. This is as I said, the bearish case. From here, it may drop down in a full wave 3, or maybe with this, you can count this as a B to finish around the 100%, around 3,400. We'll see. One of the things to note here, and this is one of the ways that you can use the Elliott Wave, the rules of Elliott Wave pattern formation to your benefit, and this is one of the things that I'll be looking for here. This is a pretty solid 5-wave move for a wave A. As a looks like was it a leading diagonal? Yes. Now what we can see here is the high probability area for the drop actually overlaps with wave 1. If we get that, we'll look at the bullish case in a minute. Maybe I should have saved this part for then. If we get that, and then a rally, and this could always, I think the previous presenter presented this as a possible top for a wave 2 or wave B with a decline already underway. But if we get a drop into this area that overlaps wave 1 before a completion of the rally up in here, and that may if we sort of work backwards and project the wave 5 around A equals C, we would get a deeper wave 4 drop before that. That's going to tell you that this whole thing is a corrective move, and so bulls should watch out because of the overlap. And I'm not sure if that is clear, but those of you who are familiar with some of the rules of pattern formation, it should be. Now this is a case where, and what we're looking at as an alternate here is that if the October low was the bottom of this correction, and now we're starting to rally back to new all-time highs, that would count this ABC as the completed correction as a zigzag. And as again the previous presenter noted, there are a few different ways to count this as a completed correction. Now this is a case, again, this is the bearish case. If we then ask the question, well, let's assume that this was a completed correction. What are we doing on rallying up? And this is a place where I use, this is one of the features of WaveBasis I use very heavily. And I try to encourage people to pay attention to this feature because it's not something, I don't know of it on any other platforms, and people tend to look over it. And that is imposing a bias on an account. So in this case, let's impose I have imposed a bullish or an impulsive bias. And so instead of AB, as we saw in the previous chart here, we're looking at the same section, the rally up from the October low. Actually, let me, before I move on, let me give you the guys the link to that chart. Just 1 second. Okay, that's the last S&P futures chart I just looked at. If we are now rallying up to new all-time highs, this is where we are. Same thing. Wave 3 is stopping about where we would have expected it to. We are then would be expecting a drop back for wave 4 and a rally up to finish the wave 3 up here. And we can project that out too. So we would, if one is bullish, you'd be looking for that, and it looks like it would just barely make a new all-time high there. But again, and even more importantly, in this case, if we drop down and overlap with wave 1 here, you know that this is not a wave 3. So this is something to pay attention to. It can be an early clue to what happens with the stock market moving forward. If we get overlap here, it's an important level, 4208.5. So that's the S&P. And let's take a look at silver. So that's the stocks phase of this. Now let's take a look at some metals. Again, same chart I've been talking about for almost a year. And we have a solid 5 up into the 2021 high. And we had a 5, we moved down for A, a bounce for B, about where we would have expected it to land. And then I talked about this before, we had the confluence, the projection for B down to around 20, projection for wave 2 in that same region. And sure enough, this high probability zone held as good support. In February, this is where the same line here, February 16th of this year, 2023, we were dropping down, and I was noting that we should be getting, not should, I was expecting, based on this being my primary account. I think at that time we were already in this region on a poorly formed correction. So I noted that we could overlap with 1 here, and that would signal that if we did get a turn, that we're forming a leading diagonal. And sure enough, that's what we did. And you can see the wave 5 stopped where we would have expected it to here. And so I have us as my primary silver account dropping back in a wave 2 subdivision from this wave 2 with confluence around 21 to stop the drop as support. So we'll see. But so far so good. This is this is another account that I've been tracking for a couple of years. Now let me make sure that was there anything else. And here, let me give you guys that link. The silver chart. And so maybe it's useful to look forward from here. What do we have moving forward? So if this primary account continues to hold up, what we're looking for is a new bull market in metals that portends to shoot for around the 48 area before anything on the downside stops. One of the things, let me just really quick, this reminded me, I'll just jump back to the Tesla chart. As I said, I'm looking currently pretty bullish on Tesla. But what we want to look for here, what we want to watch out for in Tesla, is as I mentioned, and as most people know, the A equals C area. So if, right now, my primary account has us going up in a wave 3 off of a 1-2 here. If this is going to give us trouble, one of the places that could give us trouble is at around the 100% extension. That is where if, for example, this, instead of a 1-2, this is an A-B, we would expect it to stop around here. So if we get some sort of rejection around the 100% extension here, a strong rejection around there, it may be time to reassess the larger picture. So watch out for that, especially because we don't know whether this 5 is going to hold. If it holds at the 100%, watch out. I should also mention that the extension, the Fibonacci retracement, and particularly the extension levels that you're seeing here, you may not, it's unlikely that you'll be able to emulate them on other platforms because most platforms use a different way of calculating Fibonacci levels. As far as my understanding, WaveBasis calculates Fibonacci levels correctly, the way that Ralph Nelson Elliott and Parker Frost recommended, and the way that makes the most sense. So you may not see the same levels. Any of the extensions that I've shown, you might not be able to see those on your platform. And actually, there's an article on our blog about this, and I'll paste that too. I hope I'm not pasting. I'm not trolling the chat here, but it's a useful article. So let's, so that was silver we talked about. So we're looking for a new bull. Gold. Now this is a pretty interesting one. This is another one that I've been tracking for a long time and presenting in these events. I've talked through before how we were looking for wave 4 around the 1700 area. After we got the wave B bounced, we got a place to mark some potential overlap, confluence. Then again, when coming down here as wave C in a 5-wave move, once we had the wave 4 bounce, we could also project the wave 5, which happened to overlap with the other projections, a really strong area of confluence there. And I should note that I've highlighted and locked some of these projection areas on the chart to highlight the idea of confluence. But you're not always going to see confluence. Sometimes a wave B projects to a different place than the preceding higher degree wave will. You can interpret that as no information if there's no overlap, or you can interpret it as a warning, and maybe you need to look at an alternate wave count or wait until more clarity emerges, which is a common expression. So coming in, so obviously we got into that high probability area, that confluence area. It held the support and we started rallying. Again, the line here is from February 16th, the last event, where we were dropping down in a wave 4. And this looks, this is not, shouldn't look too much unfamiliar to the silver chart. And as most of us probably know, the metals tend to move together. Good question. Yes, as I mentioned, I'm focusing, somebody asked, the tool doesn't work thoroughly below daily time frame. WaveBasis works down to the 1-minute time frame. I'm focusing now on the longer term, intermediate term forecast, just to get some of the concepts laid out and spelled out. But you can do exactly the same sort of analysis that I'm doing now, down to 1 minute, 5 minutes, 15 minutes, whatever you like. So here we are, presumably rallying up in wave 5 from this higher degree pattern. And we see, well, how are we looking in terms of of the statistical probabilistic expectations. Well, we have a 1, 2 there, and 3 hit about where we would have expected. We had a deep 4, just like silver, but in this case, it didn't actually overlap. So this is an impulse. And then once we got a turn for wave 4, we can project where would we expect wave 5 to be. Well, right around here, and sure enough, a little bit of spike out of it, but you would have had a nice warning that you're in the topping zone up in this area. So now we see we're dropping back. Looks like a pretty clear 5 waves down. Where did those little waves hit? Well, the 3 hit where we would have expected it to, and same thing on the 4. I call this painting by the numbers, because you will be amazed at how reliable statistics actually are. So we would expect that somewhere in here we're likely terminating a wave A, or at least that's what I'm expecting as a primary expectation right now. Another favorite number, as previous speaker noted, we're generally looking for on a wave 2 correction, looking for it to terminate in the general rule is in the area of wave 4. Our research actually aligns with the previous speakers. It's generally toward the bottom right here. We can see the projection for wave 2 is right around where wave 4 terminated. Further, one of the things that we look for is for wave A to finish around the 382, and there we are. So we get a wave A down around the 382. So we'd expect it to finish in here if it's not finished already. Then a bounce up for wave B around 2000, and then a drop to around 1850, 1825. So we have, depending where this wave B finishes, we may have confluence to shoot for down below to continue the uptrend for wave 5. Now, what's really interesting, what I love about this particular count is, as you can see, we're coming off of presumably coming off of a wave 3, finishing wave 4, and now we're rallying for wave 5. Now, given the current structure, we would expect wave 5 to. We would have expected wave 5 to finish in this area. But what we have here, and if wave 5, if we had, well, let me say it a different way. What we see here is that this high got to 2085.4, which did not take out the previous wave 3, 2094.9. Now, the Elliott Wave Analysis leaves open the possibility that we get a truncated wave 5 here, in which case we'd be looking considerably lower for our correction after that, which would tend to contradict what we're seeing in silver, which would be uncomfortable. But given that it didn't take out the previous high, what we can be alert for here is an extended wave 5. So what I'm as my primary count, I'm looking at this as wave 1 of 5. Which will, it's just, it's a kind of a gift that it didn't take out that high right there. We can project that forward. So we're expecting the actual wave 5 to be up there somewhere. Okay. Have I already given this count? Is there anything else? Maybe I should look a little bit, pardon me, a little bit more of the historical count here. I've talked about this before, I think, but again, one of the things that you want to do if you're trying to assess how solid a wave count is, how reflective is a wave count to what is actually happening in the crowd, what is the pattern that people are moving through in the context. If you're looking at recent history has to be supported by what has happened in the past history. And so we can see this internal wave 3 here, again, is beautiful. We had wave 3 hit where we wanted it to, or we would have expected it to, wave 4, wave 5, it's just pretty, statistically pretty. And, you know, I get excited about stuff like this. And I, I hope other people do too. So that, you know, coming into 2020, I had a really strong, you know, had a reason to have a strong suspicion that we were entering a wave 4. And, you know, it was painful to wait for it because it took a long time to finish. So almost 2 years, more than 2 years to finish. But sure enough, it did what we would have using probabilities and the rules of Elliott wave pattern formation. It did what we would have expected it to do. And it continues to do that. And that is one of the beauties of Elliott wave analysis itself. If you see a market doing what you would have expected it to do, the assertion is that it's going to continue to do that. That's where the predictive power of Elliott wave analysis comes into play. So again, I have never stopped waking up excited to play with WaveBasis every single day. I heard some jingling. Would you demo intraday timeframes? Can you zoom in a bit? What do you want to zoom in on? You want to zoom in on this, on gold, Jody? Is that you?
No, it was just when you show a chart, I was just asking you if you could just zoom in a little bit on the most recent price action so people can actually see the detail.
Okay.
Yeah,
So let's
look
at it. We can look at a 15-minute chart here. And we'll have to get some of the wave detail in. Maybe 60. We'll start at 60 and go down to 15. So now we're looking at, we're coming down from that wave 1, just to, if you're oriented. This is again what I'm calling wave 1 of wave 5, looking for that wave 2 to hit down in the 1790 or 1800 area. And we can see, how did we build that wave A? Well, we have a 1, 2, 3, 4, 5 here. You can see that 5-wave move for wave A. It's actually a clean impulse with no overlap. We can also see again that wave 3 hit right. Actually, it looks like this is counting as some sort of flat in there. But personally, I'm not a big fan of things like truncations, expanded irregular waves. I find them statistically noisy, but WaveBasis will sometimes, because they are valid, I personally would probably count this like that. But that's some of the subjectivity. But in this case, it doesn't really matter because we got the bounce we were looking for, and we continued down in a 5-wave diagonal to complete wave 5 of A. So what we would expect, I think I've already shown that. We would expect a bounce. Maybe not now. Maybe this is still completing. This is a messy sort of decline on the 60-minute. We can look at the 15-minute, and this is actually one of the things I mentioned on the blog. I would look at is how do you know when a wave is finished? One of my sort of catchphrases is the last 5. I'm always looking for the last 5. Do we have a last 5 here? Well, maybe. I don't know what's it doing now. This is a live chart, so we're looking at. It's actually delayed from COMEX, but you can see that the prices are updating. Looks like we have 3 here. Is that gonna? Do we have a 1 up and a 2 down to start the rally, or are we going to get the dreaded or the famous 1 more low? I won't get into this sorts of thinking that goes into the strategy for choosing entries. Maybe I'll do that in another video. But if I was looking for a short-term trade here, there are pattern-based. There's a pattern-based thought process that you can go to decide. This is not pretty enough. Let's look at it to see if we can get something that looks like a good 5 waves. Let's see, 1, 2, 3, 4, and a deep 5. it's counted as it's counting this as a diagonal. Not incredible. Well, it is a diagonal because we have the overlap here. But hopefully that gives, I'm not gonna, I could wander and start picking this apart and doing deeper analysis on the short term. But hopefully you get the idea that there's down to the 1 minute time frame is what WaveBasis will do. So the intraday, we're going to inverse correlation. Well, that's something we can talk. I wouldn't get into that right now, particularly because I'm not a yen trader, so I'm a dollar yen trader. But it's a reasonable question. Somebody asked a pretty long question about the inverse correlation between dollar yen and gold. I don't think that this is the appropriate time to get into that. Let's see. I did want to look quickly. We have time for one more. I'll look quickly at Ethereum. This is kind of an interesting one. Again, it's a wave count that I've been tracking for about a year now. We have the 1-2 here with the deep 2. Again, that's that 786 that I like to trade from for 2 waves 2s. And we have looks like a 5-wave move up. I don't know if I mentioned this in quotes. It's kind of doesn't do it a good service to call it a favorite number because it's based on math. But again, we have one of those favorite numbers for a subdivision. A wave 1 subdivision off of a wave 2 is the 786 extension. And again, you will not see the same extension levels if you're not using a platform that calculates Fibonacci extensions correctly using percentages. So just quickly, because I'm going to run out of time, I think, before we get to the last slide. So as I said, I've been tracking this count for over a year. It hasn't so far given me a reason not to continue to track it and keep it as my primary. But what we have here is we're kind of in a tricky spot, I think. I'm kind of on the fence in cryptos in general right now, because what we have here is what WaveBasis has chosen as one of the highly ranked wave counts is this one. And what's nice about this one is we have a wave 2, presumably that dropped right down into the A=C zone and turned. Okay, so maybe, but the problem I have with this wave count is that would be a statistically really shallow wave 2. So it could turn and rally. One of the things that should be kept in mind is, generally speaking, shallow waves 2s indicate, again, what we're talking about with Elliott Wave Analysis is the mood, the sentiment, what a group of people thinks should happen, is going to happen. Markets go up when enough people think they should go up. So generally, a shallow wave 2 can be interpreted as an indication that a lot of people are ready to rock and roll in Ethereum and likely cryptos at large. I have a hard time buying that right now. I think we have lower to drop. So, but I'm tracking this one. If we're going to rally from here, and what we see so far is, if we're going to rally, it looks like we have a 1, 2, 3, and the 3 stop again where the statistics say they should stop. We would expect a drop back for 4. Maybe that 4 is already done. We've got a little bit of a drop back, and we would expect it to go higher to complete 5. Let's stretch this out and see it a little better. So if you're bullish, you want to at least see this before you bet the farm, or something like that. And for me, for my taste, after that, I would be looking for this to complete a wave 2 and then rally. So I would be buying it here. I'd be buying down here, just as a little bit more confirmation. However, given that this is a shallow wave 2, it could rally. It's not my primary for the time being. Given that it's a shallow wave 2, I tend to look at it like this. I'll move that wave 2 out of the way. Let's Let's get this. Let's see what we get. We'll delete all of those. Okay, let's recount that. One of the other features of WaveBasis is not what we're going to do there. But let me put it in there like this. So what I'm leaning toward as my primary is something that looks more like this with the confluence down around 1450, 1400. Nifty. Why is it not an appropriate time? How can we access? Well, somebody asked, how can we access your tools? I'll show the link at the end. It looks like we're at the end. So this is, I would just quickly, my current primary expectation is that we are not done yet with the drop in cryptos. I would say focus on Ethereum, but you guys should know the high correlation between these things. And we're dropping down. If we get that 5 up, I'll pay more attention to the bullish case. For the time being, I'm looking lower. I'm running out of time, so let's go back to, does anybody else have any other questions? Don't have time to do Nifty, sorry. And why is it not the appropriate time? Just because this is a limited time thing. Feel free, if you have questions about other markets, sign up for free trial, write into support. We're always happy to review charts with folks. And you know, support is one of the things that we live and breathe support. So if you have questions about inverse correlations between markets, send us a chart and we'll help you with it. So on the offer page, sign up for a 14-day free trial, no credit card required, risk-free, try it out. You will have access to our fully functioning trader level plan. And other features that I didn't talk about today is a wave count scanner. You can scan for specific setups, wave 2, wave 3, wave C, whatever you like. Automatic wave count forecast, I talked a little bit about that. Smart tools, I mentioned Fibonacci, smart support resistance, Elliott channels, all really powerful, all really quick, easy to use without having to draw them yourself. In the interactive wave guide, one thing I didn't mention, that's here. You can, again, if you're still learning the patterns, learning Elliott Wave analysis, you have a guide here with the most important rules and guidelines for each of the patterns. This is also linked to the chart, so you can hover waves on your chart and see what they are and see the rules that are associated with them. That's spelled out here. All sorts of things you would expect from a charting platform: indicators, drawing tools, chart types, global market coverage, forex, cryptos, futures, stocks, over 120 exchanges of support. I'm sorry, of data coverage. And as I said, enthusiastic support. We love to hear from you guys. Write in. And ta-da! You can use a coupon code. This promo code here, EW Hub 2023S, and get a 20% discount on your subscription. What did I just do? Yeah, there. And I'll put the link in just. Here we go. Yes. WaveBasis. I can spell it right. Bear with me. I know I'm running over time. Sign up. There it is. Okay. I think that's it. Looks like I'm out of time. I hope you guys enjoyed that. I hope you guys try out WaveBasis and hope to hear from you at our support desk.
Thank you, Stephen. Great analysis. I love your product. I'm speaking at 3 o'clock and I am using WaveBasis to,
wow.
to show wave counts that complement our swing markers. It's uncanny, the ends of swing moves.
Yeah, Jody, we keep talking about what we're going to do here. We'll get to it, I guess. I can't wait to see it, though.
Yeah, I'm doing it. It took a while.
Awesome.
Okay. Thank you so much.
All right. Thank you, Jody. And thanks for everybody who came.
Okay.